Sajiv, we earlier spoke about LIC Housing Finance. Just wanted to get your perspective on the recent deal that SR, RCom for their towers business did, even JPVL did for some of their assets. Do you think that any of these banks which have recently started to focus on retail but have a substantial corporate book, something like ICICI, something like Axis, would be in focus? It comes in as a significant relief when such big groups see debt assets being sold and paying off of majority part of their debt. Is that something which the market has already factored in, or they would wait for things to pan out in the next couple of quarters?
Well, I think you've clearly seen the reaction in ICICI Bank already to the SR deal. The share's up substantially from its recent lows over the last couple of days. It's obviously very good news in theory, and hopefully that the money comes to the banks quickly. And it's good for the sector as a whole. There is obviously concerns on a lot of the debt, especially with some very large companies with a very large exposure, which some of these banks have very large exposures to. So it's positive. I don't know if the stocks will move up much more just on this news, as that's already factored in over the last 2 days. But certainly it's stocks like ICICI Bank, Axis Bank, HDFC Bank are stocks which we like anyway. So we would have looked to accumulate on the declines. And for the investors in the long term, it's another bonus, positive news. So hold on to the stocks, and hopefully this corporate restructuring and the corporate debt repayments will continue more aggressively over the next several months.
Right. Two of your large cap investment names are ACC and Hero. For ACC, after the Ultratech cement numbers, what would be the call? Numbers were not that great, but valuations are high for the cement space. And for Hero MotoCorp, Havells, the sales miss over there, is that something which we can look at, saying that the numbers may not be that good?
See, both these stocks have had recent highs. Hero's come back down from 3,700, ACC from 1,700. These are sort of investment plays where you can accumulate on the declines, and when the FIAs and the large investors and funds start to buy, they'll have little choice but to put at least some of their funds in these large caps where there is liquidity. ACC, despite the Ultratech cement numbers, remains in a good sector. It's again in the infrastructure space with this government pushing ahead with reforms and likely to continue to do so. There'll be more emphasis and more, hopefully, capex spending. So these stocks, again, are proxies to the growth story. So if you believe in the long-term India story, these stocks may be not the best for short-term traders, but they will give investors steady returns if you have a 6 months to 2 to 3 year sort of time frames. And at the current levels of 3,400 for Hero and 1,600 for ACC, I think it's a decent time, if you've missed out before, to maybe start to accumulate. You can also sell put options, collect a little bit of a premium again. If the stocks fall, you can effectively buy the stocks again. And it's not to say that there won't be some further downside and correction in these stocks, but there is a limited downside. And as you've seen, when the markets are in this sort of nervous mode, it's the stronger stocks which will always bounce back faster when calm returns.
Right. Also, one small cap name you have, Tarla Solutions. What's the call there?
We've been bullish on this for quite some time. It's a turnaround story. The liquidity is there now in the stock. We're expecting the results tomorrow to be very good, and the results for the full year to be exceptionally good. If that happens, and the stock should hopefully get a re-rating, everyone would use their facilities there into the OTPs whenever you do a credit card transaction or any sort of transaction like that. That OTP is generated, and that's one of their key businesses. And that business is likely to only grow further and further as the emphasis goes away from cash and more online and credit card usage. So it's in a nice sector, it's a niche company, it's got a decent management, and the balance sheet as of now looks very good. And hopefully over the next few quarters you will see very good results from this company.